The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi, everyone. Basil Chapman. My pleasure to be here. Actually, my pleasure to be here again. I was here for Larry's show at 9 o'clock, and I believe I'll be doing Larry's show tomorrow. Larry will be back on Thursday, and he'll be interviewing Norm Winsky. That should be very exciting. And well, let's go to the numbers. Dow's down 190 at 17,701. S&P's down 23 at 2,058. The comp index is down. Oh, this is interesting. Comp index is down 60 at 47.57. And gold, which was quite a bit higher, now is lower. We had this whole thing during Larry's show where we're talking about, I'll go through it right. Actually, I'll go through it right now. Basically, what I was looking at was the dollar had the potential to make a low based on the 120-minute chart, but really based on other factors that also had to do with gold possibly making some kind of a top here. And that the dollar, although it's broken down below the 93.63 low of the 12th, also today tested the low of August, the 92.62 level. It went down to 91.92. So the rule of thumb that I have in the Chapman Wave methodology of these arch formations suggests the same thing that it does on the daily applies to the weekly. That the bar that takes out the left side low in an arch formation has that bar or no later than the following bar. In this case, it's this week to close above the August low of 92.62. We're trading at 92.74 right now. It's fractionally above. It is leg E in the weekly chart, having gone to a peak F at 100.51 the week of December the 5th. And that tested the high of 100.39, broke it by 12 cents, the high of March of last year. That cup formation said, in my work, it's the exact opposite stance, that there needed to be a close, two closes above the 100.39 level to assess whether it can go even higher. But if it broke down, if it took out 1/3 to 1/2 of the distance between the lip on the left, that's 100.39, and the low of, why haven't I typed that in? 92.62, 92.62. In August, that's the week of, I believe that was 8/25. What we're looking at is a potential to retest the lows. We've just done that, and we've done it in leg E. That's just for the very first time. We're looking at a coordinated attack on the dollar that has key support. That support coincides with the exact opposite of what we're seeing in gold and a number of the other commodity indices. Most importantly, it says that this week, the dollar has to close above 92.62 or at the latest next week, above 90.62. If it does that, we actually have to wait for a buy signal in the daily, which goes to a buy signal in the weekly to be able to get a sustained move to the upside. I think this is just a bounce as gold, silver, we'll look at that in a moment, take a breather. And I'm calling it a breather. In other words, if you want to be short, yeah, you can go short, but you've got to treat it as a short-term trade. Because my contention is that there should be some kind of a digestive phase, and then we'll see whether the commodities have strength to move higher. And I suspect that they could because of what's happened in the dollar. Now, let's go to the nitty-gritties. I'm going to the dollar GC, and I'll show you that we've made a leg E, almost certainly a peak E today. But what is the big deal? The big deal is there's an up channel, and within the up channel, there's a technique in the Chapman Wave that I call the inside track. that inside track is a repellent zone. Every time the price, look at this, every single time the price, I'm going to squeeze a little bit. There you are. Every time the price has gone into this area, it's been repelled. Peak D. Remember the Chapman wave? We look for the lowest, most identifiable low bar. We merely count each successively higher peak. When we get to a D, we consider that's where you got to be careful. Doesn't mean that you have to pull back sharply or take time, but very often it does. In this case, it did. Back in August of 24, gold made a high, and it pulled back very sharply, going to what began as the up channel support. It went to another peak D, the 15th of October, and it began to create this up channel inside track repellent zone, and it worked again at a peak F, February the 11th. It worked again both at peak C and D at 1287. Well, it keeps changing because it gets smoothed out. The high, the date highs and lows are perfect. The patterns are perfect, but the price gets smoothed out. So 1289.70, the high of the 11th of March, pulls back, holds this up channel, and what does it do? It spikes up, and it goes to peak ABCD, and then it goes to peak E. Yesterday, probably today, creates the peak E at 1306. Now it's pulling back. What is the evidence here? The evidence is that if patterns repeat, this should come back down, and the key support will be at 1234, 50 points lower. That's what we're going to be watching very closely. All right? You can see the same thing in the weekly. So that's gold. Look at silver, the continuous contract of silver. Spikes up to a leg, E. MACD turns around very strong. Excuse me. And then turns around. And the stochastic, that's the MACD. The stochastic made a higher high when it went to those little peak C's and B's and C's back on the 14th of April. And then it spikes high. It goes to that E, and the stochastic is failing. The relative strength is turning down. I think there's a little digestive pattern that we're looking at. Leg D in the weekly means you have to have a whole week before you can even consider that it's a peak D. Major support in silver is it's at 1738. It's at down 29 cents. Major support is in the 1680 to 1640 area. That would be quite a pullback, but it can happen. Big moves up, big moves down. Okay, we've got crude oil, CL. Now that's a little different because I've only got this. How am I going to? I can't rename that. That's a C, and it's a C and probably a C minus. It's going to fail. I don't know what to say. It happens occasionally. The weekly chart had a strong resistance, didn't get to the 47, 48. Oh, wait a minute. Hit 46.78. Didn't get to the 47.5 level. Australian dollar, AUD, USD. Why am I doing this wrong? Suddenly I'm blanking out. AUD, USX. Well, why am I blanking out now? I look at the dollar and I get a DXY. EUR USD. Okay, I got it. It's USD AUD. I'll figure it out. USD AUZ. I'll figure it out. We'll look at the dollar, Australian dollar, US dollar currency pair. Down 190, S&P down 22. We'll be right back. Basil Chapman, Tiger Technicians Hour.
If you're looking to discover a new financial resource and diversify your financial portfolio, don't miss out on the Market Safe Commodity Solution CD from Everbank. This is the second running of their popular 5-year US dollar-denominated CD, which gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar. With annual pricing caps of 70% per component, you can earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The May 19th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. I had a question about the Australian dollar. That's AUD-USD. That's the Australian dollar currency pair. Australian dollar and the US dollar. And basically what we're looking at is that it made a peak after the Chapman wave. This is a very interesting pattern. Let me take a moment here just to discuss the pattern. You see the down arrow in the Chapman wave? Everything coincided. You had the lowest stochastic. The MACD was way under 80%. And you had the potential here for this arch formation, double arch formation. So when it held from that peak D on the 30, for those of you who do currencies, on the 31st of March at 0.77225 and pull back to the 749411 area, that next rally was accompanied by the stochastic. The MACD was doing okay. And this is what I call a right arm failure pattern. It's in the Chapman wave. It's in my book, Introducing the Chapman Wave Methodology. And all these patterns are there. And now what's happened is, this is what I call the double camel hump pattern. And basically what you've got in the stochastic, you've even got a little bit in the MACD, is that there's another arch that forms, but it doesn't have the technical veracity that the others had. The MACD is really not participating. It's not even close to where it was when it made the C and the D previously. So this is the pattern that really gives you a tip-off that it could be a very sharp decline. Now, what we're looking at is, within the context of the AUD-USD, Australian dollar, I'm going to just take this left side, right side price time match, and it says that there's a really good chance, based on this technique I developed using a plumb line at a particular bar, a particular candle. If I say particular bar, the implication might be incorrect. At 0.74141, that's the low, and I suspect that it will be tested by the 10th of May, whenever that is, 10th of May, next week, and that's the pattern, and I'm going to put in a channel line right there to say, and that's your resistance. You got very clear parameters to look at, and we're getting close to a Chapman wave inside track support area, how it holds right now. So how it holds is going to be very important, because if it doesn't hold, it's going to keep coming down to this trend line and making lower lows and lower highs. Okay, and the weekly chart has got a peak D in place, but I can't really put a down arrow until the end of the week, because the MACD is still good, the stochastic's still at 83%. So I'm just going to put a plus sign for now. But if on Friday they both close lower, and the stochastic goes under 80%, and there's a deep move below the 9-period moving average of 0.754, I'm going to put a down arrow. Monthly chart is still in leg A. Let's go to Scott in Safety Harbor. Scott, how are you?
Wonderful, Basil. I'm looking for an entry point on Alcoa. It's, I was hoping that it would pull back, and here it has.
So, okay, this is still leg C in the weekly chart. Very good chance that it's going to make peak C. I've got a peak E, a very nice peak E with a down arrow in the daily, because it's under 80%, just fractionally under, but it's gapped down below the 9 EMA. I'm going to suggest two things. The first is your patience is going to be well rewarded if you can hold off. Well, let's see how it tests between $10.03 and $9.82. Mm-hmm. If it finds some support there, you could get one of your 1.5 to 2 day bounces. Only a bounce at this point. I think Alcoa, like the whole commodity area related sector and heavy duty industrials, and which this is, I'm suspecting that we've got ourselves a sell mode in place in Alcoa, and that it's really the 990s to 980s that's going to be the real test. You might get a little bit of a bounce. Treat it only as an intraday bounce. If you can get 35 cents to 40 cents, that's fantastic. Be a little patient. In fact, I would say to you, if you aren't going to do any shorting, this is not a bad time just to say, you know what, I've had a fabulous period. I'm just taking 3 to 7 days off. I don't have to do anything. I'm just going to wait for things to settle down, because the way I'm looking at it, today was a confirmation day that the sell signal to sell mode in the daily, almost all the indice daily charts, is probably setting in place some kind of a sell signal in the weekly charts. And if that's the case,
2 days ago also, when it was 1150, there was a lot of people sold off at that time, and it just has gone up so fast.
And you also have to realize there's a pattern that we all look at here: 1136, 1128. There's 1073 was the high today, and 1074. There's an island reversal. If you're looking at my charts, I'm drawing it in the daily chart, and that's usually, I don't treat it like it's a potent weapon, but very often what it says is, at least in the short term, be very careful, because if the gap isn't filled, it's telling you that there is so much downside pressure that it didn't even have a chance to tag the low of yesterday, and it's in a more conservative
that's the way I
move.
looked at it exactly. It just zoomed right past that. And I think one of the problems people are having with Alcoa is they've got just familiar with this a new girl in class in the last month, when it's trading in the high 9s and 10s and 11s. They don't remember very recently. 2.5 months ago it was $7. It was $6.85 when you and I were trading it. So,
and it was $6.14, and it was the low.
I don't know why people just refuse to look back a little bit. It's real simple to see where it was. They just, I think it's a good thing. No, people have a very positive attitude about things, but sometimes that'll get you in trouble with stocks.
and the other thing, Scott, is that there was a period of recognition over the last, I would say, the last move up from the 24th is when it started, but really from the 15th, the middle of April, that was the period of recognition. To me, that's always a sign to be really careful. So now I think you're right.
And I call that a false move. When I saw it jump from 11 to 1150 one day, I term it as a false move. It just wasn't really based on anything but a momentum. And then when it got there, boom, everybody got out, and then you see what's happened today. So I agree with you entirely. I'm looking at that 10, and when you talk about 10, then you should be able to realize that it's the 995, 990, that type of thing.
Don't be surprised if it goes to 950 and then tests the 920 area. to my eye, I think
Don't
we're
get me
looking at.
excited now, Basil, because then I start seeing 8 and 7, and I get really, really excited because I know, and I agree with you about the commodities, and I think people sometimes get a little confused because you just said the commodities. The commodities will go up. They will come back, but before they come back, they're going to go down first.
And they often have very vicious moves, so we got to be somewhat careful over here. And we'll be keeping
It's
our
almost
watch
like
on the dollar.
some over high powerful traders, when they see something that has value, that they can somehow push it down to where they can. It's no different if someone wants to badmouth your house and then they come in and buy it, And
Right.
It seems like, yes, it has value, but before that happens, these powers to be are going to push the value down so they can buy a bunch of it.
Exactly, and with a lot of volume. So, and also Caterpillar, kind of not the same category, but within the same move. Leg D, peak D in the weekly, peak D in the daily. So yeah, thank you for calling, Scott.
But for
I appreciate
anybody
it.
that's
Have
stuck in it
patience.
at 11, don't worry about it. It'll come back.
Great, it'll be back. We'll be back with Greg in San Marco straight after this. Basil Chapman, Dow's down 196.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. We're back, and we're going to go straight to Greg. Hi, Greg. How are you?
Oh, hello, Basil. I'm well, thanks. How are you?
I'm good. You'd like to look at?
CMG. There's an example of your bifurcated market for you.
Yeah, now this is very interesting because there's a stock that we wanted to show today I gave a time limit. I think we just missed shorting it in the time limit that I wanted. I said by 11:15, and it had a low today of 262, and it's bounced up to 266.20. It's up 181. This is exactly like the stock you're looking at. You're looking at Chipotle Mexican Grill. It's trading at 446.97, up 13.47, up 3.50%. You know, there are a couple of things that I've been thinking about Chipotle, because when it made its high back at a peak F top in the monthly chart, and then it came back to retest. So it went to 758.61 in August of last year. It pulls back and it goes to 757 round number high. So just $3.61 away with a round number in October, and then that bar collapsed. And of course, it's had some terrible news ever since then. They've done everything wrong, and we don't quite know the story, but the story is probably going to be a story that kind of backfired on them. And now what I'm looking at is, I think we're looking at a couple of stocks that have been beaten down, and that their fair value, if any way of actually working out a fair value for a CMG, when you've got that whole story of the food,
Right.
you know, the food. Yeah, I'm not even sure what you can call it, because it was, I don't know if it was bacteria. I don't know what it was. No one's really said exactly what it is. And Pete D in the Den said, "Can CMG go on a run?" No pun intended. I think that what we're looking at is that this is that rotational aspect, and that rotational aspect says there are going to be some stocks that have had a pretty big pullback from their highs. We're talking about 750s, and now it's trading at 445. It actually hit the low of 399, call it 400. We're talking about 170 points. I mean, that's a massive move in a stock. I'm not even sure. I've never eaten at a Chipotle Mexican Grill, but I know people who have, and I know people who just have loved it. So they've got something, and I suspect that if they can just ameliorate some of the bad news that was going on, and they can have no cases whatsoever of anything other than good news, I think it could bounce, and then I suspect it's going to just bounce to a certain level, and then it's going to come down for other reasons, because I think economically there's a lot that they must have spent to try to correct the problem, and that'll show up in the bottom line. So let me ask you, I'm just taking it for granted here, but I should have asked you the question. You're looking at this as bounce material?
Right, and I thought that, you know, with the market heading lower, that I'd get another chance to see how it tested that 415, but, you know, it went to 417, and then the market started to pull back, and I thought it would too, but it hasn't.
And actually, when we're looking at the chart, it's showing really nice relative strength in relation to the market. Even the last 2 days, where the market had a good day yesterday, but today's a real good example. I don't know if there's news or anything like that. I would hate to be buying it on just some kind of news or speculation. I would love to have a little bit more facts to say that, yes, there have been no incidents, health incidents over the past 3 weeks or 4 weeks. So this is what I'm going to recommend to you. I don't think this is something that you want to be looking at as a long-term buy, but I don't see any reason why, because of today's action, that if there was just a little bit of a pullback between now and tomorrow, it can't be a big pullback. In other words, 437 would be critical. Breaks under 437, I would not want to touch the stock. But just as a spec, if you want to start a small position, even here at 445.75, if there's a market rally by the end of the day, this should participate nicely. And if there's a deeper market pullback, it shouldn't give back more than 2 or 3 points unless there's something. This is just purely a sentence. I mean, this is not based on any facts. This is just based on some kind of sentimental thing. So I'm looking at this and saying 456 is the 9-period moving average resistance in the weekly chart, which happens to coincide with this downtrend line that I've drawn from the recent highs back in March to the lower high in April. And it comes out to be round about 460. Well, 15 points is pretty good, even on a percentage basis in a market like this. But what I really wanted to say to you is, because your risk is 1%, say 5 points from here, you can make it 1.25. If I make it 7 points, I would say to you, I would make the risk no more than 3 or 4 points. Why? Because it has to follow through to the upside tomorrow, regardless of what the market does. But
right.
I think a 3 or 4 risk, when you've got yourself a potential 15 points or 16 points to the upside, is well worth it, because if it takes out by, today's Tuesday, well, by Friday, if it has not broken 438 support, but instead is now trading at 451 in this market environment, I don't see any reason why it couldn't have a pretty decent bounce. Excuse me, I don't know what's going on with the throat. Going above the 460s. So I think that your 15 points up, if you want to make it 5 points down, I personally would make it less than 5 points down. In this market, if it does start to give back, it means that whatever happened earlier this morning is news related. It isn't really factual related. But I'm looking at the chart. The stochastic's turning up. The MACD is held very well. Nice divergence between the recent. Good eye. I think you've got yourself focused on something that has a chance to at least try for maybe 6 points up minimum and 3 points down. If it succeeds and holds right through the day without taking out the 444 level, I mean, it's had an opportunity right now with the market to pull back. So CMG, Chipotle Mexican Grill, trading at 445.26, up almost $12. I'm going to give it my sanction because I know that you're looking at it for just a trade. Then I'm going to suggest to you that if it gets to the 457 to the 463 area, we start looking at it as a short.
Okay.
So
thanks so much.
And let me know how it works out. But just don't, and in this market, don't over risk, and don't make it a mental stop. Just slap that stop in as you buy it, because you don't want to be sitting there saying, "Oh, it's now down 5. Oh, it's down 7. Oh, it's down 10." Be exactly. Very strict, absolutely strict. Thank you so much for calling, Greg, and good luck.
Good day.
Thank you very much. Have a good day. Okay, now, folks, this is what I want you to do. I was looking very closely at Ford the other day, and I kept saying, it's moving up 1239 to just over 14. Everywhere I go, I'm looking, I see Ford products. Everywhere I go, I'm now looking at more and more General Motors products. What the heck is going on? Why aren't these guys flying? But I think there's a lot going on that we need to look at. So I'll be back, and we'll look at Ford, and we'll look at General Motors, and we'll look at Fiat when we get back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
I didn't have anything in my trade station on the earnings or anything. I asked when the earnings would be in another in another form, but I don't see. Investors should look at the valuation, etc., etc. Yeah, I'm just doing this on price. I'm not sure what the news is. There must have been some news. I didn't see any news. There are a lot of downgrades, yeah, but I don't see any other news. As of April 27th, Chipotle's Pierce Panera Bread is 31 times. PE Shake Shack is 93.6 times, and Brink International EAT is a symbol is 12.7, and they have the PE has rose from 53.9 to 57.8. That was already the first quarter result. Yeah, I don't see it. I think it comes out in July, the next earnings. Anyway, so I just thought I'd try to cover that just on a more basic level. I'm just looking at the price, and absolutely the way the monthly is, I see no reason to do anything other than a short-term trade. So that was just for Greg. Let's go to Tim in Denver. Tim, how are you? Is Tim there?
Thanks for taking my call.
Yeah, hi, Tim.
Yeah, thanks for taking my call, Basil.
My pleasure.
I apologize. If you talked about the IBB at all, I just kind of got on now. I'm kind of curious on your feeling on the IBB.
Okay, well, IBB is trading at 266.75, down 4. I suspect that it has done a peak A, peak B, peak C, and a peak D top in the weekly chart. Very quick. When you're in the Chapman wave, when you go quickly from an A to a B to a C to a D, you can expect a pretty sharp, quick decline. It doesn't necessarily mean that it's now going to go to a sell mode in whatever you're doing. In this particular case, because the MACD is still so weak and the stochastics at 66%, I'm looking at this as just a mere H pattern that's going to come back deeper. So I'm looking at IBB. Well, first of all, as one can see here, we've been short. We were short the IBB way back in July of 2015 at 393.10. We could have, I told traders if they wanted down to the 240s to take profits if they wanted, but we would hold because I thought it was going to go much lower. We then did get stopped out at 282.10, I think it was, and we went back in again short at 282.59, and now it's trading at 266. So my viewpoint is that the monthly, the weekly, and now the daily at that peak D 289.71 high of the 22nd of April is suggesting that the next level of visual support doesn't come in until the 247 round number low that it made back on the 29th of March. But within that, I can see a little containment area in this candle right here, the candle of the 1st of April. For me, it was a surprise move to the upside in the markets. It reinstated the uptrend, and that was 268 high and 257 low. So I'm thinking that we're now into this candle. So the candle low of 257, somewhere around 261 to 257 should be some kind of support. And as I see it right now, there's a problem. I just think that the I shares of the NASDAQ biotech, all the I shares, the BBHs as well, I think there's a real problem in that there's been a sector rotation. And when the big funds that were buying and buying and buying, look at this 9-period moving average from the time it broke out in November of 2011 at between 92 and 102, not once did it close underneath the 9-period moving average until after it 400.79, and then in September of last year it went to 285. So it's been spectacular. Now we're looking the amount of time that it takes funds to get out of a particular position, to get into a position. Sometimes it takes them not as long to get out, but it has to take them a long time because they can't put a million sell. They have to do 200,000, 200,000, 300,000, 100,000. It takes it's a week, and then it's 3 weeks, and then they have to come back again. And then there's invariably a bounce, and they think, oh, okay, we're going to hold it a little longer. Then it goes down, then they start selling again. So my ICE is the upside is limited from 267 to maybe 274 is the 9-period moving average. But my eye also says that based on the technicals, this is a down mode in the daily. It's just about to become, I have to wait for Friday. But at this point, it looks like it's reestablished the down mode in the monthly and the weekly, and the monthly remains very weak in the technicals. So I'm looking at it as lower highs and lower lows. Does that help you a little bit?
Yeah, I want to get short, so I don't want to do it right here. I'd like to see a little more if I could get a bounce to 270 something.
So Tim, I'm referring this now. We've missed a really nice trade in the BIS, which is 2 times short. Sometimes we've got it real nicely, but overall, we've only made a little bit of money for subscribers. Most of the 111 points were made in the actual short of the IBB. For some reason, I found that shorting the IBB has been a lot more profitable than trading the BIS because it moves just so quickly, and I tend to put in fairly tight stops. So I would say to you, if you want to use the BIS, it's trading at 40.27. I'd probably see if I could just get it in the 38s. It's a lot safer. But if you're looking at it, I agree. In the 271, between 271 and 273 is probably an ideal place to reestablish a short if you haven't got a short now. But there's another way to do it as well in this environment. You could just nibble on the short side here at 267. At least you're there, and it gives you a real good feeling for when the market rallies is the IBB. For instance, when the market rallied yesterday, the IBB most of the day was just terrible, and then it rallied towards the end. So it's now a follower. It used to be, you remember it well. When the market was down, if IBB was up, the biotechs were rallying, this market turned around. That's just the way it was. Now it's something very different. It gets dragged up, and it pushes the NASDAQ down. So I think you're right. If you want to hold off, you can hold off, try to get it at a higher level, but you can also just nibble at it here. But really, the full position starts when it hits the 272-ish, in the low 270s, if it can get there, and as it starts to roll over. As it rolls over, that's when you can add to the short side.
Thank you very much, Basil. Appreciate it.
My pleasure. Thank you for calling, Tim. Good luck with the trade. So, folks, the Dow's down 180. There's been a little bit of a rally. Let me see if I can get my 120-minute chart here. ESM 16. Yeah, a little bit of a rally, and it hit. Oh, this is very interesting. I've got the ESM on a different. This is a different. Okay. You see this little pink line here? Let me just show you. Format the average 2 line. This is the 9-period exponential moving average right here. that little pink thin line, and it went right to it a moment ago, 10 minutes ago, the E-minis, that is, and then it pulled back. Now, if you're look at the volume. You see the volume spike right a bar after the high at 10 to 4 on the 2nd of May. And then the market came back very sharply. And now look at the very high volume. There are a lot of sellers, so I'm wondering if we're getting close to some kind of a bounce. We'll try to talk about that as soon as I get back. I'll also look at Ford and General Motors. I forgot about that.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with Swim Lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Hi, folks, we're back. So let me just do a couple of things. You remember the AUD USD? I think I did that. Yeah, I did that. That's right, I did that. I was just trying. Let me go to Ford. Ford, the way it's looking, that should be a G right there. Excuse me. It's trading at 13.49, down 12 cents. The resistance is at 13.59 to 13.66. Could this be a category that on its own has a bit of a rally? Let me just look at. I don't know what's going on. Why should they be selling so many vehicles and just not making a profit? It's not just Europe. It has to be including here. And General Motors is not bad, not great, not bad, but they should be higher. All I can say is I'm going to have to wait. I would love that you buy the American products, Ford in general, and you buy the stock, and that they soar to the moon. But as it stands right now, I'm going to have to give it another day or two, because they're risky. So that's that. The other thing I wanted to do, I had a question about a crude oil. What are the waves down? Well, it was a trough E in the weekly chart. Now it's a peak A, then a peak B. At this particular point, you're in leg B. If crude oil does not go above 46.78, it's going to be a peak B. I'm not sure whether I've got the count right. There's nothing I can do. It's a peak C. If it fails, it becomes a peak C minus. That can happen when you're underneath the left side, the whole left side series of highs. So that can happen, can fail. All I can say is that for crude oil, a close below 42 suggests that we're going to have a deeper correction. And if it can bounce between a low of 43.20 and try to touch 40, it's at 43.75, touch 46.20 in the next 2-3 days, that'll say, okay, just a sideways consolidation. Those are the only ways I can look at it. I've discussed the dollar. I've discussed, if I could look at the NQ 10-minute real quickly, NQM 16, it was notated, now it's not. Yeah, this is very difficult. I would just say 43.31 right now. If it takes out the low of the day by 2 o'clock, 43.19, it's going quite a bit lower. It has to get into this ugly candle at the opening today. It has to get into it 93.31. If it cannot get to 43.40.50 by about 1:15, that's really tough. It's just not going to be good. So that's the NQ. One other question I had was, let me go up here. Yeah, all right. So the whole thing with the CMG, I'm still standing with that CMG as something that could work right now. Just there are a couple of stocks that are doing this that have been beaten down. So now let me do this. You're going to go to a swim lesson right after my show. I'm going to suggest to you that the numbers to look at for me at this particular point, the VIX is at 1597. If at 2:20 this afternoon, between 2:20 and 2:35, as we get into that last phase of the market, if the VIX is slipped to the 1560s, you could see a nice bounce going into the close. However, if the VIX takes out today's high of 16.4, no, it doesn't have to do that. If it goes above 1620 and the market starts to pull back, and that holds into this whole period that I'm talking about, that 220 to 235-ish area, be careful, because a close at the high could take out the high of 1709 that was made on the 29th. This is a very critical period for a number of things because of the dollar, etc. But the most important thing that I can look at right now, keep your eye on the VIX. In the 16s, it's selling pressure. Under 15, it says there's some buying pressure. Under 1450, it says quite a bit of buying pressure. Have a wonderful day. Stay tuned for all the fabulous shows coming up. I'll be back tomorrow. Check out my opening call. I think you'll find it really interesting and hopefully very profitable. I'll be back tomorrow. Stay tuned.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.